Is gold going to continue on moving higher towards the highs, or are we going to get a reversal and a move towards the lows? All right, so for the past week, we didn't really get much of a move, despite having very great news within the market. So we did, of course, get some impulse within the previous week, the week before last week, and then price sort of just consolidated through around last week, but we didn't really get like a very bullish move last week. That can be confirmed by the by looking into last week's candlestick, which is really just a shooting star type of candlestick. All right, so with this regard, what are we going to be expecting within the next coming few weeks? All right, so last week we did get news within the Horizon Bridge Macro Intelligence Dashboard, whereby we got US CPI come out negative. So we did get US inflation come out at negative by only 1 point. Of course, it was the same as expectations, but it was a move from 3.5 down to 3.4%. So that was similar to expectations. That's why I believe the market didn't really expect react much, but we did just get a consolidation around there. But we did run a scenario study within the Horizon Bridge Macro Intelligence Dashboard, whereby if the CPI estimate for year on year was to come out as the actual being greater than forecast, then that would be a sell signal. But if we flip it, if we flip this and get actual it's less than forecast, of course right now we can't perform a new study, but if we were to flip that, then what we would get is we would get a buy signal within here. So a buy signal would essentially mean that the inflation coming out as high would elevate the lower CPI would directly confirm that there would be a decline in the inflation within the United States. And what that would do is that it would reduce the pressure on the central bank to actually elevate rates, which inherently would also affect the GDP growth and the consumer spending within the United States. But one of the things that we ought to look at is how it affects the discount value, or rather the opportunity cost of owning interest rate yielding assets such as US 10-year treasury bonds. So one thing that you will actually notice within here is that right after that we were expected to see the DXY move, sorry, that's the DAX, but the DXY move much slower from where we were. But of course we did get a reaction whereby we did get prices, the DXY price moving much slower than we actually were. That's actually a very good signal. And for the US 10-year yield, we also did get a reaction whereby prices are essentially failing to break above the 4.725% level. But from here, one of the things that we are also expecting is that there's a possibility for gold to actually continue to move much higher. So of course we did take a trade from here, whereby we had a trade from here. We got exited out for break even. That was pretty okay. We got exited out for break even, but one of the things that we're looking into right now is to potentially find a trade much higher. So now one of the things that we were actually looking at is, of course, we're not going to assume that the trade is going to fully continue going up, but we're just simply going to react, and so the way that we're going to react to this particular trade is that we're going to react based on the if and then scenarios. So if prices of gold move much lower, what we're going to do is we're going to find an area of high value whereby we're going to find a rejection and then take a trade short from that area and then take it much higher. So the path of so in this case, one of the areas where we would expect that to happen would be around the 4,197, or in short 4,200 level. So at this particular price, we did get some multiple rejections from here, whereby prices rejected here, and then another rejection was here right before creating this sort of like order block right around here. So we could expect prices to move down within this particular range before moving much higher. So of course, if we also take the Fibonacci and perform a Fib study from here to that level, you'll notice that this area just falls around the golden zone, which is around this area. So you can see that that is around the 50% level. So if prices come down into the 50% level, then we could see prices potentially moving much higher. So apart from that, one of the other ways where in which this could play out is that prices are just going to continue to move much higher from here. We might not get prices to move down to this particular point before making the reversal, but we might just get prices move much higher from where we currently are without coming down into these areas. So these are the two scenarios that could happen. And the third scenario that could okay, of course, if this scenario occurs, then what we're going to do is we're planning on setting out a short-term a low-risk trade within this currency, or we're going to specifically take it from silver. So we're planning on taking out a silver trade from where we currently are, risking somewhere down around here, just taking it from here and risking somewhere at least around 0.4%. So if prices begin to move or continue to move much higher, then we're going to have a 0.4% trade within the market. But if not, if prices start to fall, then our losses are not really going to be too big, because we will have already hedged ourselves, and it will just be a very small loss. And if prices do manage to come back down within this area and then make a bounce, we are going to take in more buys from here, going much higher. Of course, we're not going to reach 1% yet, but if we get signals for a reversal, then we're going to add an extra 0.3%. If we get to this point, just so that we're at least 0.7% invested within this. So that's how we're going to play it. And of course, within the Horizon Bridge Macro Intelligence Dashboard, one of the other things that we're actually looking at is our asset scorecard. So the GOATS rating within the asset scorecard. So this is currently rated at a 8.0 out of 10 bullishness for this. And of course, this is made up of the COT data and the put call ratios, which you can also find within the Horizon Bridge Macro Intelligence Dashboard. So if you come down into GOAT, you actually notice that this is actually very much bullish. So you notice this is 67% is bullish and 33% is bearish. So that's very bullish. And now if you look at the put call ratios, you also notice that gold is very bullish on that front as well, with a rating of 0.57%. So if you just look at that, whereby within this range of 1.1 and 0.9 is where prices are neutral, but if we get below 0.9, then we're in the bullish territory, and if we're above the 1.1, then we're in the bearish territory. It simply means that in this case we have more calls than puts. So if you have more calls, or the numerator is much higher than the denominator, then what you get is figures that get closer and closer to zero, which favor the denominator. So that's just that about the trade that we have on gold. And I guess in this case, in terms of oil, we also did get a trade on oil, which we ended up exiting for break even as well. We didn't really hold this for long because of what's happening within the Strait of Hormuz. So within the intelligence dashboard, you will notice that Trump, okay, so instead of having to look through here, of course I can just search for Trump in here. So okay, so Trump urges Americans to accept higher gas prices as he escalates Iran rhetoric. So this is very big, because it means that Trump is not willing to back down of the war. So if this continues, then we could expect the prices of oil to actually continue on much higher. So we are not confident. The reason why we exited this was because of news such as this, whereby Trump keeps on escalating the war, and he's actually informing people to get comfortable with whatever is happening currently. So currently I would say that we are not really having high hopes that the war is going to come to an end anytime soon. And if anything, one of the better positions to be in currently is not to be short short on oil, but rather to actually be bullish on oil. But otherwise, this is simply a very risky trade. So oil right now is volatile. We are very volatile on oil, so we shouldn't really expect that this is going to be profitable. For it's not going to be easy to guess. So if anything is going to be very hard, we're not going to get like a proper trade setup through here. Of course, we did get like a rejection from this around this area, which is a very good or high value area in this case, and we could see prices move down from here. But who's to say that Trump is not going to continue escalating the war? But at the same time, if you also look within the news whereby Trump urges Americans to accept higher gas prices, this is actually very bad for oil. We might get much higher oil prices. So that's that about the types of trades that I have on within the market. And I guess apart from that, one of the other things that I just sort of had my eye on was of course I'm not currently trading stocks, but we did get some good price action within the Nasdaq as well, whereby we estimated that there would be a possibility for prices to continue moving much higher. So I guess right now the only thing that we're looking at is gold, and if gold manages to move much higher, then we're going to have a position open within there. So yeah, so that's that about the market. And I guess with regards to CHF JPY, we could estimate that prices are going to move much lower. But one of the things that we should see within the weekly time frame is that prices did manage to get a very huge pull down, and this hasn't yet been covered. So by covered, I mean that there's possibly a lot of orders within this area which were not fully covered. And I believe this is what our friends, our ICT friends, call a fair value gap. So prices need to come back down into these areas. It doesn't need to in absolute terms, but then it might move back up into these areas before actually making a move down. So that's why on the 4 hour you will see that, I mean on the daily time frame for CHF JPY, you might think that this is potentially going to go down much lower from here, but we might actually get a pullback up before moving down. So this is just something to have your eyes on as well. You can just look at it, but don't trade it, just look at it. Yeah, so all right, so thank you so much. That was all for this video, and I hope you have a great trading week.